Peter Mcguire joins in now on the phone line to tell us what all this action crude is about. Peter, Goldman has put out a report saying that the fall we saw in crude prices over the last few days was not backed by fundamentals, and there will be production cuts come 25th of May when OPEC members meet in Vienna. Do you come from the same school of thought? Do you think the sell-off last week was completely overdone?
Well, good morning, Samina. A couple of quick things. I'll be attending that meeting in Vienna on the 25th of May. I feel as though that's probably been oversold. You may see a bounce, which you're doing now. It was all coming down to those inventory levels, and I think that there was overall, it was sitting above that $50 level. There was not enough interest there from the hedge funds and money managers. It's been sold off. I think it'll probably fluctuate between that 45 to 47 over the next week and a half to 2 weeks leading up to Vienna. But the question is, Samina, what happens if they do extend those cuts forward? That could really put a little bit further of a handbrake on the actual market.
Peter, actually, we have seen on Friday, there was a good trade happening around the dollar, basically euro, pound, they all actually went up after what we saw in terms of results or expectation around the results. So what are you expecting in terms of dollar trade for the start of this week? Can we expect the dollar to weaken further?
Well, I think it's going to be interesting. I think that there was a lot of, the jury was out in the sense of what's happening with Macron and Le Pen. That's only come to light in the last, say, 10 or so hours, 12 hours. Actually, Macron won. So in turn, I think you could see a little bit of a stabilisation. I wouldn't be surprised to see the US dollar actually strengthen a little bit over the next, 24 to 48 hours, and taking on board that news. There was a lot of uncertainty. If Le Pen was to win, that would certainly have weakened, I think, the markets as a whole. But at the turn, you're probably going to see a stronger equity markets. It'll push up the Indian market. But more importantly, US dollar will probably rally a little bit, I think, to the upside.
Right. Peter, there's been no information of the border adjustment tax in Trump's tax plan. There was supposed to be some move on the WTI, contingent upon that. So A, that. And B, shale oil rigs have even scaled 700 now, and it's a 16th straight week of rig addition. Do you think that that's playing a big factor in suppressing crude oil prices on the higher side? And obviously this is at cross purposes with what Saudi wants right now, because in this year they want to list Aramco?
Yes, exactly right. Well, first off, the rig count has been just, one-way traffic. Price elasticity, but more importantly, workforce elasticity, that it's able to just jump in, leave from jobs, turn rigs on, 3 to 6 weeks later you're pumping oil. And that's been very evident across that Permian Basin and, of course, what's going on as far as deep water. But when you put your mind across what's happening, the US, I think, is on a one-way growth target for crude oil. It'll probably be the largest. It's currently running number 3. I wouldn't be surprised for it to take out being the largest producer over the next 12 to 18 months. So that's really going to put a handbrake, I think, on prices moving up from here. What happens as far as President Trump's tax? I think we're in a work and see process. You'll probably know more as each week rolls on. There'll be more, sent to the press, and we'll be able to understand the fundamentals and the foundations of what he's trying to achieve. So I think overall, that leads me back to the next part. The Saudi Aramco, they will naturally want to see a higher price from valuation, and as far as selling, 2.5 to 5% of the value of Saudi Aramco to the market. So it's going to be a very interesting time to observe crude over the next 6 months and leading up to Christmas. I think you're going to continue to see price volatility.
Peter, so if I had to ask you, what's the trade on crude right now at $44 this morning? Would you consider going long up until the 25th of May, or would you short this trade? Staying out of the trade is not an option for now.
No, well, that's right. I think first off, but you've got to be mindful also, Samina, I think many traders will be jumping in and jumping out over that short term. You're talking 2.5 weeks. Many traders are only in for a matter of either minutes, hours, or days. So I think your money managers, they've been piling short positions. They've really captured that. That's why you probably could see that bounce to the, up $1 or $1.50 from here. If you don't have any further geopolitical leading up into May 25, and nothing happens externally to the market, then I think it'll probably hold at these sort of levels. That's probably not a bad trade to be in for a short period of time. Be careful of your stop losses, understand your leverage, and more importantly, keep a very close eye on what's happening as far as US dollar and any announcements from the Trump administration.
Right. Peter, what's your view on Asian currencies? Because, I mean, be it the Korean won or the Indian rupee, Indonesian rupiah, or even the Taiwanese dollar, we are seeing fresh additions of incremental long positions, notwithstanding the kind of already strong performance that these currencies have yielded across the EM pack. Does that trade continue? I mean, does that make you feel comfortable at this point?
Well, it's been a one-way traffic, and it's been a tremendous trade. I feel as though that it probably will have some further upside. Again, you've got to be conscious as far as your stop losses. Be very mindful as far as what happens is if we see a rate rise come out of the Fed over the next matter of weeks. Is there any announcements, anything that can put more pressure on that US dollar? I think that could cause some sort of, again, price volatility to a number of those Asian currencies and, of course, the Indian rupee. But that's a wait-and-see approach. Not quite sure where Yellen sits on it all, but we'll know further, I think, as each week goes on again, leading into, the middle part of the year.
Peter, what's the call on base metals? I'm not sure if you track that whole universe, but recently you've seen a huge sell-off across the base metal universe, on back of which miners worldwide are selling off quite sharply. I mean, with some sort of risk-on trade returning to global equity markets, what is your sense on base metals? And of course, you did say you expect the dollar to strengthen. So should I take that as a cue that commodities could see some more selling pressure going ahead?
Well, I think so, Samina. I mean, you're thinking about what's happening as far as iron ore, for example. It's, oversold. Well, pardon me, it was overbought, I should say. And more importantly, the sell-off that we've seen, many analysts are saying you could see, that 50, even to 45. I think some of the banks were coming out with forecasts leading into Q4 for iron ore. There's stockpiles sitting on, warehouses and on wharves in China that are at record levels. Copper's had a very solid sell-off as well. The number of the other base metals have been hit very, very hard. It'll turn into, and again, probably within another couple of months, wonderful buying opportunities for the Chinese and for other importers and so on, because just sheer size of the market, but more importantly, that big correction is going to present itself with great buying. So I think that, while copper takes a hit, have a look at nickel and have a look at lead. They're all, similar. So I think that there'll be pretty good opportunities as far as a buyer's concerned, that probably Q3 leading into Q4. It's a very fascinating time. What happens also if US dollar and just the sheer market itself.